box there. There's a Q&A box, so please just pop as I'm talking, put your questions in there. If I can stop and answer them, I will on the way. But yeah, if we can just put them in the Q&A box, that'd be great. Someone's using the chat, but yeah, better if you can do it in the Q&A, then I can keep it all in the one spot, would be really handy. So yeah, cool. I'm going to share my screen, and I'm just going to make sure I pick the right screen to share, which is number 2 on my screen here, and we are good to go. Perfect. Excellent. So let me just pull up my other screen. Just give me 1 second. For some reason it's not coming up. It's done something. Sorry, I've got to find my presentation screen. It's not deciding to work on me. Hang on a second. I've lost my screen now. Oh, this is embarrassing. Okay, what I'm going to do is I'm going to stop sharing for 1 second. I'll get this over here and I'll do it again. Just give me 1 sec. I've got too many screens open, Richard. That's my problem here, mate. Give me 1 sec. Okay, slideshow. There we go. And now I go back to here, share screen number 2, and we're away. All right. Give me the thumbs up. Is that good? You can see the screen? Yep, sweet. Thank you. Awesome. So where to buy under 600K? So a bit of background. So I work as a buyer's agent purely for home buyers, residential property investors, commercial buyers. As Richard said, I've got an economics background, but don't hold that against me. It actually helps me to understand the market and also where the trends are going. So love to give you lots of information today. Just be note that anything I give you is not strictly financial advice. It's all around property. So if you do going to take anything and take some action, I do encourage you to take action, particularly get your next pre-approval through Richard and his fantastic group, and work out what your capacity is to borrow. Because we're going to be seeing some rate cuts, Richard. They're coming very soon to a brokerage near you. So on the 20th of May, you'll see at least one rate cut. It could be 0.35, definitely 0.25. Could be 0.35. There's about a 60% chance it might be a supersized 0.5%, but I doubt it. I reckon the Reserve Bank will be a bit conservative. So we're going to start to see a resurgence in the property market going forward. Before I get into specific locations, I just want to give some of the principles here about what we look for in particular locations for a property. So I think it's really important to look at what drives a particular area. And these are some of the key factors we look at. So we like to go out buying areas that basically have higher demand or higher propensity to increase in value. And these properties under or around 600K, I mean, 500 is now gone. Like 600 is the new 500. And this has happened literally in the last 12 to 24 months. We like to buy areas where there's strong capital growth potential, that's got that affordability factor, they've got low vacancy rates. And a big one here, number 4, is amenities and infrastructure. If I had to circle any of those things on the first slide, it'd be number 4. That's super important to get that. And then the next thing you've got to look at is population growth. Population growth on its own is not something that's just going to drive property prices. It's a contributing factor. So an example, say in the Queensland market, might be the Ripley Valley. It's projected to have strong population growth, but there's lots of land available that hasn't been developed yet. In Sydney, you've got lots of areas around the airport, like Luddenham and Oran Park and all those areas in the southwest. But will it get strong capital growth? It'll get some, but not as much as the inner ring and middle suburbs that have got very limited land development, that opportunity for new development. Another big one is diversity of employment. Please stay away from mining towns. Don't buy in one industry towns. Buy in areas where there's a multitude of industries to supply employment, which then is the key for them to pay off your mortgage on the property you buy. Another one is where there's a chronic shortage of dwellings. In other words, there's not going to be a new influx of supply. That's a big driver of property prices. So constriction of supply would be a fantastic thing to drive. And also lifestyle factors. A lot of the things I've chosen here are very attractive. And a lot of people, after COVID, during COVID, have moved to these areas in chase of the elusive lifestyle choices. So there's some of the factors we look for. And let's get into the individual locations and look at why I've chosen them. So first one I've chosen is Townsville. I really like Townsville. It's a if you've ever been there, it's a fantastic city. What you're looking at on screen is called the Castle Rock, which is a big lookout overlooking the whole city and the bay. It's really a city that's come of age, particularly in the last 5, 10 years. It's kind of got really five pillars to its economy. It's got defense, which is a really big one. It's got agriculture and mining. It's got tourism. It's got education, and other government services. So in terms of defence, that's probably one of the biggest ones, which is very stable. In fact, the Defence Force just announced that they're going to have another 700 personnel coming to town. So with a vacancy rate, I think it's around 0.6% at the moment in Townsville, with another 700 personnel, then don't forget, add the families. So there's at least another two, three, maybe four people attached with each defence personnel coming into that town. It's going to have a zero vacancy rate. So that market is very, very strong from a yield perspective. And I'll give some examples, later on of properties we've bought for our clients in that area. We've done very, very well. You've got a major hospital expansion going on as well. They're spending around 600 million dollars expanding the hospital. There's about a $1.9 billion CBD revitalization going on as well. So it's not just an area for jobs, but it's got attractive lifestyle. You're not far from Magnetic Island and some of the Barrier Reef there to do some snorkeling. So we think it's pretty good. And in the report, by the way, Richard, I'll for everyone who attends or registered today, I'll give them all a copy of my report, which has got some of this summary information on it as well. But the biggest factor of growth in population, in 2021, the population's around 234,000. That's expected to grow to 360,000. So very significant growth for a major regional centre. And that's going to have profound implications for their property market. So you're not going to see, lots of high rises, but you'll certainly see a lot more medium and outer areas being developed in that Townsville market. So, yeah, your houses, you'd probably be lucky to get something at 440. That'd be in a pretty poor condition, I've got to say, to around 650, and yields around 4.5% to 5.8%. So, market that we really, really like. We think it's got a lot of legs going forward. Yeah. I can't see if there's any questions, but I'll come back to it down the track. No, it doesn't look like it. So we'll go to our next area, which is Mackay. So a bit further down the coast. Mackay is a lovely town, based there on the ocean, also a big river flowing out to the sea. It's got a very high demand, low supply again type market. So those two critical factors causing a constriction, leading to strong prices. We're getting really good yields for our clients in that market. A little bit cheaper. You've got houses 450 to 620 and units around 300 to 400K. But there's quite a few new, again, infrastructure things going on. You've got a big coal mining project not far away. It's also the Capricornia Energy Hub. It's about $1 billion being spent on transport upgrades. You've got a big waterfront development there, around $300 million being spent on the Mackay waterfront redevelopment, and another 250,000 on a hospital expansion. So yeah, it's got a really pleasant feel to it. Pretty hot though, I've got to say, Richard. Not the sort of climate I'd like to live in, mate. You can need an air conditioner, that's for sure, if you're living and working there.
Yeah, that is
But
one thing for
unless you're a
sure.
tradie working outdoors, you need your aircon on. So yeah. But yeah, your vacancy rate at the moment in Mackay is around 0.8%, so pretty low. But yeah, pretty good yields, almost that sort of, high 5%, almost over the 6% mark, which is very attractive. So if you can put in the right amount of cash, it'll be a neutrally geared or even positively cash flow type property going forward. What else can I say? Yeah, so the big sort of surrounding area, you've got a couple of big coal mining projects, Kevin's Corner and the Alpha Coal projects. They're about a $12 billion investment going into that market. So yeah, it's a good market for growth and yield as well. Let's have a look at the next one, which is Rockhampton. Good old Rocky. The next slide coming up. Rocky's a lot cheaper. you've got to be careful of the flood zones in Rockhampton. So you've got Rocky and Gladstone. Rocky's just got that. Gladstone doesn't have the flooding issue, but Rockhampton does. So you don't want to be buying anywhere in the flood zone there. So make sure you check the flood maps before you buy in that location. Yeah, houses 360 to 610, so quite a broad range. Yield 5.2 to 6.5%. Again, some key critical infrastructure going into that market. You've got major projects. We've got a wind and solar farm at Clark Creek. It's about a $3 billion investment there. Some big road upgrades, the Rockhampton Ring Road, which is about a $1.7 billion upgrade. And you've also got another rail upgrades, around $100 million. It's being spent on the Rockhampton to Townsville rail expansion as well. So pretty family friendly area. I found when I visited these towns many years ago, the locals are just true blue Aussies. They're all there trying to make their way and make a good living. So yeah, good community, good atmosphere. Vacancy rate recently was 0.7%. So again, very tight rental market. That's what's driving these yields so strongly. There's not a lot of new development, not a lot of new land supply coming on, so pretty significant. And we've seen some pretty good capital growth there. And we're expecting the population to grow from around 81,000 people to around 93,500 people over the next probably 10 years or so. So pretty solid sort of growth going forward. Whoops, daisy, what's going on here? Yeah, sorry, I'll just close that screen. Let's have a look at the next one. Bundaberg, where my favorite ginger beer comes from, right? So I can't say hands up who likes ginger beer, but that's certainly one that I love. Bundy's a great town. Again, pretty decent sort of broad range of prices, 450 up to 750, so a little bit higher there in terms of price ranges. But we do know that, again, another hospital project is really leading the way in terms of creating a bit more infrastructure growth and that sort of thing. I've got to tell you, Richard, I find that hospitals are a good attraction for property prices. You get all the medicos, all the nurses, doctors, and that sort of thing that come into that market, and that's a big driver of local property markets. All the critical workers need somewhere to live, and so they're always looking for rental properties. So that's a strong driver. Yields around 5 to 6%. What else can I tell you about it? So a couple of projects nearby. There's a big residential project called the South Beach Estate, and they're spending about $2 billion in building that South Beach Estate area. There's another solar farm. Queensland gets a lot of sun, right? So got to harvest as much as you can. There's around about, what's this investment? $130 million on the Isis River Solar Farm, and also another highway upgrade. The Isis highway upgrade, about $42 million being spent on that. So again, I'd say Bundy's got a nice sense of community. It's got a good lifestyle appeal on the beach, on the water. Your vacancy rate there, again, 0.4%, even lower than the other places we've mentioned, 0.4%. So to me, that means that, if a property goes up for rent, you should have it rented basically within a week. Very, very low vacancy. 2% 2 to 3% vacancy is considered, in my view, a normal vacancy. So these areas just have such tight vacancies that's going to continue to push the rents higher. And we're seeing a population growth forecast going for about 99,000 people up to 126,000 people over the next decade. So again, it's got all the right kind of drivers, and we think it's a good market to go forward in. Let's have a look just a little bit further north, and let's head up to Gladstone is our next point of call. Let's go on, here we go. So Gladstone, again, on the coast, nice big safe harbour there. I used to own properties in Gladstone myself, and I put a lot of investors in there back in the day. Gladstone's got it's what I call resources linked economy. So you get it's got a big aluminium plant just across, you can't see it on the photo, but it's to the right of that photo, big aluminium processing plant there. It does a lot of exports. LNG gas has been one of the big drivers of that market. So they were going to build about, I think it was 3 big LNG plants. Only 2 of them got built. but has tended to go through boom and bust cycles, this market, but it's stabilized lot more in the recent time. Um, what else have they got? Apart from the LNG, liquid natural gas, you've got the $31 billion inland rail expansion and also a green hydrogen project, about a $4.7 billion investment there. You've also got a water pipeline going from Rockhampton to Gladstone, and that's around a $983 million investment. And also the port expansion there at Gladstone is spending about $760 million expanding that. So the town is kind of connected in three different ways. You've got the harbour front, and you've got these really nice areas right on the harbour. And then you've got the suburbs, and then further out you've got a place called Calliope, which is kind of like a satellite suburb of Gladstone. I probably wouldn't invest in the far-flung areas. I'd be investing in the major parts of town rather than being further out. Yields are pretty strong, up to 6.5% there. So high demand from workers and a lot of other trades that come and go and consultants that come and go into that market. You've got a vacancy rate at the moment around 1.3%, so a little bit higher than the other areas. In terms of population, currently around 63,000. It's going to grow to around 72,000 over the next decade. So pretty reasonable growth rate going forward. Okay, let's have a look at the next market, which is going to head south now down to Geelong. Go to Geelong. So I love the Melbourne iconic photos we get for this one, right? So the Geelong Cats. I don't know if you're an AFL fan, Richard?
Not really, mainly rugby league and union being from
Okay.
Queensland, Rich. Well, I know we've got a Carlton supporter on the webinar.
Okay,
But,
look out.
yeah, so
Please, there's no Collingwood supporters. So,
yeah, yeah.
Remember the team that everybody loves to hate. But look, Geelong's a great area. We think that's got a lot of potential. The yields aren't going to be as high as what you're getting in northern Queensland markets, but I really liken the Geelong area to the Newcastle area above Sydney. It's got a similar kind of demographic, working class, sort of medium demographic. Some of the big projects that you've got going on that's driving property prices in that area is the $10 billion Westgate Tunnel. So any of those tunnels that get built or train lines, they basically improve travel time, which rapidly improves property prices. So pretty decent investment there. And you also got $2 billion being spent on the Armstrong Creek residential development. It's also a new convention centre and a women's health children's precinct, about $500 million being put into that. Vacancy rate at the moment there is about 0.9%. So again, very, very tight vacancy. But incredibly, being just under an hour from Melbourne, you can buy properties, around 650K. So I think that market, a bit like the Central Coast to Sydney, is going to really kick along. We call it a second wind market. So, and it's just driven by that locally strong economy. Population growth, you'll see it rise generally from around 270,000 up to about 364,000. So not quite 100,000, but that's a very significant growth, almost 35% growth over a decade. So, and again, affordability will drive a lot of people to live there. And on being on the bay, on the Port Phillip Bay is, again, really attractive area. So we think it's a good market. If we head a little bit further north of there, we're going to come to a spot called Ballarat. Okay, inland town, you've got Bendigo and Ballarat. Ballarat's got 7 suburbs within it where you've got median prices from 410 to 490. So again, if you've got only a maximum budget of 500, it could be something to consider. Yields around 4 to 5%. But the prices are down and the sale volumes have started to rise. So that's often a precursor to seeing price rises when you start to see sales volumes increasing. What are we seeing in terms of demand there? Again, high demand, low supply, fairly quick turnover of prices. You've got really nice living conditions. Couple of investments to note in the area. You've got a $3 billion wind farm going up in the Golden Plains. Another hospital redevelopment. There's $655 million being spent on that. And you've also got around $584 million in transport upgrades. So again, doesn't have the water, doesn't have the beach, but a fantastic country town with an attractive lifestyle. Vacancy rate in Ballarat currently sits at around 1.1%. So yeah, fairly moderate. Your actual median house price, updated median house price, is now 536. So it just goes to show these. When people say don't buy in the country, well, you tell them to get their head read because these areas do go up in value, you know. Um, where should we head next? Let's head over a little bit further south. Let's head down to the Latrobe City. So we're talking about areas here, Traralgon, Morwell, Moe, Churchill. Median price is around 330 to 500K. Yeah, good, what we call again a second wind market. So what I mean by that, Richard, is areas that have had growth, but they've stabilized, then they're going to get a second wind behind it. So not everything goes up linear, right? It doesn't always go up 7 or 8% a year. It goes up, it might stabilize for a while, and then it comes back. So this is one of those markets. So a couple of key investments in Latrobe City. You've got a $3.1 billion Marinas Link port infrastructure. So all the areas around the port area. You've also got a $2 billion regional hubs for the 2026 Commonwealth Games that was supposed to happen, but it's not going to happen there anymore. And also a $1.2 billion Gippsland renewable energy is opening up. There's also 223 million being spent on the Latrobe Regional Hospital expansion. So we find that when these hospital expansions get done, it just does bring in more medical specialists. They need more consulting rooms. They bring their families. So it tends to be a spin-off effect when you've got all these things happening in concert with each other. What have we got in terms of vacancy rate there? Vacancy rate's 2%, so a little bit higher than the other ones. But your median house price is around 435 at the moment. Population growth is probably slow and steady. 77,000 at the moment, going to rise to about 83,000 in the next decade. So it's a slow and steady performer. Let's head over to the other side of the country. So we'll head over to WA, to Rockingham. So again, lovely coastal city. Perth, as I mentioned, I think we were off air before, but Perth's been one of those markets that's really catapulted along quite substantially, but I think it's probably run a little bit ahead of itself. But Perth is now, the figures are showing it's starting to come off its steam, but Rockingham we still believe has good upside. Median house price is now 590,000. Your vacancy rate's 0.7%, and your yields are around 4.5%. So, excuse me. One of the big drivers of property prices is the sterling naval base, and that's undergoing a significant expansion. There's around about $8 billion being spent on the naval base. So again, having a defence factor as a key market driver, and that's not going to get moved anytime soon. So, you know, when the Navy's spending $8 billion on expanding something, it's going to be there for a while. The other thing, you've got Wesfarmers, an SQM lithium plant. They're spending about $1.9 billion investing in projects there. And you've also got the Harbour Shopping Centre is going under an expansion as well. So again, coastal lifestyle, community atmosphere, bit of tourism as well, but not the major driver. It's got a good mix of employment drivers. Population is about 135,000, increasing to 186,000 over the next decade. All right, another one I've picked in WA is Bunbury. So Bunbury's again, lovely coastal town, nice little safe harbour there, as you can see in the photo. Pretty cheap prices. Median house price at the moment is 581,000. Vacancy rate's only 0.4%, so very little available to rent there, which is bumping the yields up pretty significantly. You've got another hospital redevelopment, $451 million being spent on the Bunbury Regional Hospital. You've also got a lithium plant at Albemarle, which is expanding as well, about $2.5 billion being spent on the lithium plant there. So Bunbury, I'm sorry, the whole WA economy is quite resources linked. And that's the point I'd like to make is that um, while Perth itself is the sort of central hub of WA, it's not the only spot. You've got all these towns like Bunbury, Rockingham, everything up and down the coast. And a lot of them are driven by various resources and minerals, major minerals, minor minerals, critical minerals. They're all dug out of the ground and transported to various parts of the WA coast to be shipped overseas. And you'll see all of these different communities are getting a benefit from all of that growth. So unless we suddenly see the car manufacturers collapse or the tech industry collapse, I'm sure these towns definitely have a very, very long future. All right, the last one I've got is Mount Gambier, which is here in it's not here, but in South Australia. Um, so it's a median price 480,000, median unit price 310,000. It's one I'd say is just a steady performer. Um, I wouldn't be rushing out to put my money there, but I just wanted to include one South Australian market into the mix because I think it's got future potential. It's certainly a very affordable market, driven by a range of different industries. You got mining, and a lot of agriculture and other sorts of minor tourism around the area as well. So I might just see, is there any questions? Here we go. We're just going to the chat. Someone's asking, are you factoring in Olympic infrastructure for your spend? Tells me kind of this. No, again, that's a good question. That's another bonus. So the Olympics, especially for Brisbane, is going to be significant, but any of the other types of events that are going to happen outside of Brisbane will definitely have a spin-off. I wouldn't say the Olympics is the most significant driver, but it is a driver to consider going forward. So yeah, great question, Andrew. Yeah.
Thanks, Andrew.
Um,
Rich, out of interest, were those locations you mentioned sort of in order of your level of conviction, or
no,
just no?
just round.
Just
No, no,
yeah,
no order of conviction. Please don't take any merit from 1 to 10. I mean, there's plenty of other locations I haven't mentioned.
yeah,
It's like,
of course,
there's over 15,500 suburbs in Australia, Richard. So we
yeah.
haven't got time to go through all of those. There's
No,
definitely,
certainly
yeah.
don't. And those, obviously, the first, I think it was five, were Queensland. I- any comments around sort of the type of demographic that'll be likely moving to some of those cities? I think Townsville is probably going to attract, obviously, defence personnel and maybe young families, whereas we see the Bundaberg market probably maybe attracting the more retirees.
Exactly. So
Yeah.
if you had to ask me, if you said, put a gun to my head, said, Rich, tell me which one to buy in, otherwise I'm going to shoot you, I'd go Townsville number one.
Mm.
And then I go Mackay number two, and then probably Rocky number three, Gladstone number four. Because I look at the sustainability, like the three factors I mentioned up front, right? So population growth, infrastructure, and employment opportunities. If you can dumb it down to PIE, population, employment, and infrastructure, if you dumb it right down to just three, that's how I really come up with a recommendation. I'm not saying you can't invest in the other ones,
Mm.
but for me, I just want to know if I'm putting money into an area, what's going to sustain it? What's going to drive it? Mm.
Yeah,
So,
okay. Whereas maybe some of those areas that have been driven by lifestyle retirees, price growth could be a little bit more short-lived than maybe
yeah,
young families who
exactly.
are
So I
there for
think
a
that's why I say
longer time
Townsville's
frame.
got a more sustainability. I think the question there from Peggy, where would you be rushing to put your money in? Well, I'll get to some examples and I'll show you what our clients have done recently in these areas. But before I do that, um, places to avoid, with really narrow focus is obviously mining town only, or tourism towns, or just what I call, middle minor country towns. Like, okay, back of Queensland, what's an example? Roma, or watermelon capital of Australia.
Mm.
Right, great watermelon festival, but it's not going to make you lots of money, right? Yeah.
Yeah,
Um,
yeah,
just yeah, be really careful. I mean, do you remember years ago there was a magazine called was it called Property Investor Magazine? And there
yes,
was someone who won an award or something for buying 6 properties in Moranbah. Do you
yeah.
remember that? They ended up spending about $3 or $4 million of their borrowed money, and they ended up going bankrupt. So the poor couple thought they were on a winning run here because they'd bought all these property at a particular time in the market where it was really booming,
Yeah.
and then that market dropped significantly. And unfortunately, they couldn't sustain repaying their loans, and the rents dropped, and they basically became bankrupt. So pretty sad story. So don't put a lesson from that is don't put your eggs in one basket, diversify your holdings, but make sure where you're putting your money is a sustainable market and but also an affordable market. Don't just buy because it's affordable.
Yeah. I think there's a question there, Rich. I don't know if you've seen it. Why
Sure.
do you think the areas you've recommended haven't experienced the same level of capital growth as nearby regions? So why have these areas sort of maybe remained somewhat affordable and haven't seen the skyrocketing capital growth that maybe Southeast Queensland or Sydney?
Yeah, well, it comes down to the rate. If you look at those three factors I talked about, population, employment, infrastructure.
Mm,
If you look at Southeast Queensland, okay, if you take sort of Gold Coast, Brisbane, Sunny Coast as an example, there's about 110,000 people per annum moving into that region.
yeah.
That's it per annum. So that's like over a 10-year period, that's 1.1 million people moving into Southeast Queensland.
Mm,
Compare that to, I don't know, Mount Gambier or wherever. And it doesn't have the volume. So you're getting a much higher volume of people moving into Southeast Queensland, for example. And that's then bringing with a very high diversity of jobs and obviously with the Olympics coming, but that what I call exodus to affordable, exodus to lifestyle was already happening before COVID, but COVID accelerated it. So it's not to say these regions I've mentioned won't grow. They may not grow necessarily as fast as what some of the larger towns or cities in Australia will grow at.
yeah, sure. Rich, do you have a time frame that you usually suggest for people when buying property?
Yep, absolutely. So I would recommend you buy and hold for minimum 7 years. You know, unless look, it depends. That's if you're a buy and hold. If that's a buy and hold strategy. Really, 10 years is optimal. 20 years is better. 30 years is the best. Never
Yeah,
sell is even better again, right?
yeah,
But you got to get the money out somewhere. So you want to buy multiple properties. And I'll maybe talk about this in another webinar, but a strategy I like to do is aim to buy around 10 properties over 20 years. So this year you end up with 10 properties over 20 years. And you think, Rich, how am I going to get to that number of properties? Well, if you judiciously start buying, use a good broker like yourself and work out how to manage your cash flow, you can leverage and recycle your equity into more properties. Then when you get to that, age 55, 60 or whatever, you then start selling one property a year or maybe two property a year, depending on how much capital gains tax you've got to buy. And the equity you've built up can then pay down the debt that you owe on the property and you start rebalancing your portfolio.
mm,
So the longer you can hold the property, the magic of compound growth does its work.
yeah,
Albert
yeah,
Einstein said the eighth wonder of the world is capital growth, right?
yeah,
So
yeah,
if you can hang on to your properties, I can guarantee they'll perform for you longer term.
yeah, yeah. Another question's popped up.
Yeah. Yeah.
Given the high risk of natural disasters in some of the areas you recommend, do you anticipate any challenges with rise in insurance
Yes.
costs now or in the future, and do you think
Great
that will
question.
affect growth?
Yeah, great question. So I've got properties myself in Queensland. I pay around $3,100 in building and landlord insurance for that property. I mean, it's probably gone up a couple of $100 a year. Used to be about 1,800, then 2,000, 2,500. But everybody's insurance premium has gone up. It doesn't mean you don't buy in these areas, but you just make sure you can get insurance. That's what I'd recommend. So you don't know where the cyclone's going to hit. You don't know where the hailstorm's going to hit, but make sure you're covered for it. So it's certainly a risk factor, but you've just got to calculate that into your cash flow and make sure you've got a buffer. And the banks won't lend you the money unless you've got a certificate of insurance. So make sure you've got that. That's really important. Mm. Mm. I've got a couple of examples I'd like to show you, but just before I get there, just briefly, I guess some key steps that you need to think about just in terms of a process of buying a property or buying well. This is the same process that we take all of our clients through, Richard, in the order of logic. A lot of people would just go straight to realestate.com, get an approval from you and say, hey, I've got 700. I'm just going to go straight to realestate.com and start looking, but they don't think about their strategy. So it's really important to take a moment and think, hey, what am I buying this property for? What's the end goal? Is it for capital growth? Is it more for yield? Do I want to do a renovation? Do I want to manufacture equity? What am I trying to do? So think about your strategy and then work out what location is going to work best for your strategy. What's going to fit with your budget? I mean, coming on these webinars is great. It helps you support your education, but you need to do even much more deeper research into the locations before you pick an area. Then once you've settled on a location, then you start searching, shortlisting, evaluating the properties, pick out the best one, work out what it's worth based on comparable sales. Make sure you get a pest and build done. Make sure you don't buy in a flood zone, as I said, or have any covenants or easements over the property. Get your contract checked by a solicitor, negotiate the price, get it exchanged, and then make sure you've got a good local property manager that's going to manage and vet the tenants for you. So they're the steps that you should be taking. If you use a buyer's agent like myself or my company, this is the kind of key advantages that we give you. We can help you give you that strategy. We give you access to more properties than you find listed on the realestate.com. It also saves you a lot of time and money, but it really fast tracks your knowledge. And I think if you're kind of reading about a market in a magazine, it's not that it's too late, but we've probably already identified where those markets are. And we just overall give people a lot more confidence to make good decisions and help you crunch the numbers. The next question I always get is, Rich, what do you charge? What's it all going to cost me? We work on a fixed fee structure, so any property under 700K, it's the same fee. We charge 14,000. You pay 3 up front, and then that gives you access to all of the benefits that we have. But I've got a little special offer, Richard. I hope you don't mind. But anyone that decides to use us or through your group, if they engage us pre-30 June, we give them 10% off the engagement fee, off the upfront fee. So there's just a small discount there just to help everybody if they like that decision. But that's there for you. I'll put this in. I'll send you the slides. But if you're thinking about doing it yourself, which is fine, no problem, no love lost there, or whether you want to do it with us. I just sort of did a little, this is my economist brain coming out, mate, my economic analysis. What are the pros and cons of using someone else to do your work for you versus doing it on your own? I guess the summary would be we get access to more properties. We go deeper with the market research. And when it comes to negotiating and knowing what to pay, that can make a dramatic difference to the outcome. If you know what to offer and how the offer is going to get accepted, it can make a huge difference to the outcome right through it there. I'd like to just give, before I finish with the questions, I might just give a couple of examples of what we bought, just to give a bit of a flavour for some of these areas, if you like. This was a property we bought. Let me just find out where this one is. Hang on. Yeah, this was in Townsville. We paid 500,000 for it in February last year. We've just had it revalued at 625. So pretty significant equity uplift in 15 months. And that on the yield at purchase was 5.2%. So pretty good return there. Next one we bought, again, also in Townsville, we paid 445 for this. We got a bit of a bargain on that one, I reckon, just because the vendor was a bit motivated. Had that revalued recently at 585. So again, 135 grand. So a question for you, Richard, how long does it take to save 135 grand just if you're putting money in the bank?
Long time, Rich.
A long time.
Long time.
That's what I love about property, right? You just buy a thing, just does the
Yeah.
heavy lifting for you. This was one we bought in Mackay, 524 we bought in July last year. Yeah, pretty decent rent, 580 per week. We're getting 5.7% yield. Again, strong equity uplift on that property. Another one we bought over in, I think it was in Bunbury or Bundaberg. Sorry, yeah, Bundaberg, Rockingham. Paid 543, and we estimate the value today to be at 615,000. So even in 6 months, it's gone up quite significantly. Yeah. And look, I mean, the house is nothing to write home about. It's not fantastic, but look, it's a great quality property. It does its job. It's all really, really, really good. That was in Bunbury, that one was, yeah. And another one we did, again, another one in Townsville. We paid just recently, 550 for this one, and we're getting a 4.8% yield. So you can see the market has moved. We still think it's got plenty of legs left to grow, and it's a pretty strong market. And again, a lot of the tricky about buying in Townsville at the moment, it's just so competitive, right? So that's the challenge. We find that people are paying 20, 30 grand more than they need to.
Mm.
We get access to pretty much everything in that market off market. And we're able to kind of, because of our relationship with agents, they know us and they know we do a good volume. So they give us preferential treatment and we can typically get it what we call under market value as well. That's all my slides. What I was going to do is say there's probably a bunch of questions. Oh, here we go. A few more
There's a
questions.
couple more, yeah.
Are you advocating for investing in properties that can also be used as holiday rentals? Yeah, good question. Um, the problem with holiday rentals, look, they can work. Um, it's just you've got to look at your numbers for your cleaning and in the sort of higher wear and tear you typically get with someone coming in and out of the property. So if you do it on Airbnb, firstly, make sure the council is not going to charge you extra taxes. Some council areas limit the number of days you can do Airbnb, like Byron, for example, it's only 180 days. So just be careful of whether that's going to give you the right return. So it just comes down to finding out the vacancy rate. You do really well, obviously, during summer, but it might be the winter months. You've got very little occupancy. So just make sure you crunch the numbers. It can work. Do you have a preference for houses over units? Yes, I do. And I'll tell you why I prefer houses over units, simply because of the land content. Um, I've done a lot of analysis over the years. I find that houses tend to perform at around 7 to 8% capital growth, whereas units are around 5 to maybe 5.5% capital growth. So you're basically forfeiting 2% capital growth per annum by buying an apartment. Not to say you wouldn't buy apartments. Having said that, like for example in Melbourne, we are buying apartments, I reckon, below replacement cost. We're getting some that are just really, really good value. Mm. Oh, was there a second part to that question that you've just clicked off, and I can't remember what it was now? Mm.
No, I think that was
Oh, new build versus old build.
new
Was the
builds
other part.
versus existing. Yeah.
Yeah, I pretend to prefer, again, great question. I prefer to buy existing properties. And the reason being is that you're paying a wholesale price, not a retail price. When you buy a brand new property, you'll get fantastic tax deductions, but you're often paying the developer's margin. So you end up paying more than you need to by buying a brand new property just to get a tax deduction. So we look at, if you look at house and land packages, they're often way overpriced. They're on really small blocks of land, 250, 300 square meter blocks of land. And I don't believe they represent good value compared to buying established properties closer into the amenities. I think I've answered the Olympic one. Why do you think you haven't experienced that? Oh, I think I've already answered those two.
You have,
Yeah.
yes.
Cool.
That's all done. So if there's any other questions, feel free to put them in the Q&A. But failing that, Rich, how do people reach Property Buyer and
Oh,
they want to just
just
have a
as
chat?
per the slide there. Sorry, just yep on
So
my
best way
YouTube
is just
one.
to jump on the website.
Yeah, jump on the
Yep.
website or shoot me an email directly. Either way, on the website, by the way, I've got stacks of free resources. I do podcasts and webinars like this all the time. I actually did a podcast this morning about the Melbourne market, which is being released on Friday. I'm doing another one about interest rate cuts that are coming on, the 21st of May. I've got about 10 or 12 free books or downloads you can get on our resources section of the website. I've got lots of blogs, newsletters, lots of information there. You can, if you want to get educated on buying properties.
Fantastic. Okay, well, that's been really, really helpful, Rich. Very, very interesting. Glad to see Queensland's got a strong showing. And
Absolutely. Love
yeah,
Queensland. I've got a bunch of properties there myself. I'm coming up for the Pippa Awards in a couple of weeks' time.
yeah. We're certainly seeing lots of our clients inquiring about areas that are still showing good level of affordability. So, and good to hear that there's plenty out there that you can get up for under that $600,000 mark. So, well, thanks everyone for jumping on. As I said, if you'd like to chat to Rich directly, you can, or book an appointment with him or one of his team, you can jump on the Property Buyer website. If you do want to have a quick look at what your borrowing power is, by all means, book a call with us online, which you can do via the website under just book a call at mynewbridge.com.au. But no, we will send you out a recording, everyone who's attended the webinar too. So if you need to go back to anything, you're able to do so. But thanks everyone for attending.
Cool. Thanks, Richard. Take
Thanks,
care.
Rich. Really appreciate your time.
My
Thank you.
pleasure. Thank you.
Bye-bye.
Bye now.